Are you or someone you love losing money by not having a home-based business?
Are you a business owner, perhaps a real estate or insurance agent, a 1099 salesperson, or maybe a home-based business owner? If you're in the United States or Canada, I can show you how to increase your profitability dramatically and instantaneously through tax savings. And if you're not one of these business owners, I can show you why you'd be brain dead not to start one. Hi, my name is Sandy Botkin. I'm a CPA tax attorney and former trainer of IRS agents nationwide. And I'm here to tell you that what you don't know is costing you big bucks.
Greetings, lifers, and Happy New Year to you. It is that time of year again where people are scrambling to file their taxes. So I thought it would be a great idea to do a video on the American tax system, as well as how having a home-based business can immensely help you lower your tax bill. And as you may know, if you lower your tax bill, you definitely automatically increase your income. So that's what I want to talk to you about today. So just a little bit about me. I've been in the industry of network marketing for 7 years. I just had my 7th year anniversary on the 30th of last month, so I'm really pumped up and excited about that. And I do operate my network marketing business as an S Corp, and I am definitely incorporated. Now let's back up just a little bit to talk about what was mentioned in the opening credits of this video. You have a former IRS trainer and CPA who is saying you'd have to be brain dead in order to, if you do not have a home-based business. Now, this is coming from someone who knows money, and this is coming from someone who was actually in a position to get to decide what is a legitimate business, as well as how that business can be treated. So I do want to point that out. He referred to 1099 salespeople as business owners, and every single person who is in a multi-level marketing or network marketing company is considered a 1099 salesperson, AKA a business owner. So that means that if you are in a network marketing company, congratulations to you. You have officially found a legal and very low cost way to lower your tax bill. So now that we got the qualifications out of the way, now I want to talk about the differences in the American tax system. So a lot of people believe that there's two different tax systems here in America. One is for the rich people and one is for poor people. That is incorrect. The two tax systems is actually for business owners and for employees. And employees are typically the poor people. Business owners are typically the rich people. So that is why I highly recommend that even if you do not like the industry of network marketing, or if you've been brainwashed into thinking that is something predatory and malicious, I believe that this video will help educate you on why it's necessary in the marketplace, why it's still legal in the marketplace, and why people would be better off getting a home-based business versus going out and getting another job or working enormous amounts of overtime to make ends meet. But you don't have to take my word for it. Let's see what our IRS professional has to say about that subject matter.
Here is something important for you to know. There are really two tax systems in the U.S. and Canada. One is for job holders and one is for job creators, otherwise known as business owners. The governments in both U.S. and Canada create great tax laws for businesses to help subsidize your business growth by giving them cash that you never have to pay back. Want proof? Here's a real live example. Meet Mary. Mary is your everyday citizen with a job and monthly expenses such as cell phone, mortgage, or rent payment. Car expenses like gas, oil changes, and repairs. She eats out at restaurants. She does a lot of entertainment such as movies, theaters. She likes to play golf. As an employee, Mary can only pay these expenses out of pocket. But If Mary owned her own business, even part-time from home, then portions of these expenses may become deductible if she's pursuing a profit and she documents them properly according to IRS and Canada Revenue Agent standards.
So now that we had our IRS tax professional break down the differences between being an employee and between having a home-based business, now I want to talk to you about the benefits of having the home-based business, as he just covered in that portion of the video. He said that the same expenses that someone would have as an employee and they would be paying it out of their pocket, it becomes tax deductible as a business owner. And yes, that includes someone who decides to go into network marketing. So here's the thing about that. Most of the things that I was doing before I joined a network marketing company, I'm still doing them. So now we have to get into this whole idea of that, this narrative that's pushed that people in network marketing lose money. 98% of us are losing money. Well, you just seen here how 98% of us are actually lowering our tax bill because our exact same lifestyles that we had as employees are now tax deductible as business owners. And again, I come to this video with receipts. So my first year in network marketing, I was making a 6-figure income with the state. I am single and I have no children. And guess what my tax return was just by adding the addition of a home-based business? This was my federal income tax check just for doing something as simple as getting into network marketing and lowering my tax bill. Now, I know someone is going to watch this and say, oh, well, you were losing money. That's why you got paid back. You just heard the professional say that your regular lifestyle now becomes tax deductible. So the fact that I traveled on average anywhere between 19 to 20 times a year as an employee, and I'm still doing that now as a business owner. And guess what? Part of my company is travel. So according to the IRS, I get to write 50% of it off. I'm not doing anything that I would not be doing. I'm not doing anything as a business owner that I would not be doing as an employee. So that is why I didn't get that income tax check back because I was losing money. I did it because I got that back because I did something smart, which was start a home-based business so that the government could pay me instead of me having to pay the government. So when I recruit people, that's usually one of the top 3 reasons as to why I recruit other people into my business. I started in the network marketing industry to get tax breaks and to get discounts on my travel. So I figured, well, let me see who else would like to lower their tax expenses and who would like to stop paying full price to take a vacation. Pretty predatory thinking, right?
You know, I want you to think of a deduction like the best rewards card ever. Any expense that is a legitimate business expense is like getting a 20 to 53% cash rebate. Deductions lower the tax you would owe at the end of the year, essentially giving you free money just for having a business and pursuing a profit. In fact, saving $10,000 in taxes is actually better than getting a $17,000 raise in your job. Want to know why? Because by the time you pay taxes on the $17,000, you actually end up with less than $10,000. The key to all this is following the rules, which in my experience, most business owners are not doing.
Okay, so for those of you who may not know, if you have a home-based business inside of network marketing, that means that the IRS, Internal Revenue Services, will allow you 400 monthly tax deductions. Now, clearly, I don't have time to cover all of them in this video, but I will talk about how you can actually use your car as a tax deductible expense for your business. Now, one of the ways that you can do that is that you can be incorporated within your network marketing business and then lease the car. So I was talking to one of my friends who's a 7-figure income earner, and these were his words. He said that only poor people buy cars. He said only poor people finance cars for 5 and 6 years. He said what rich and wealthy people do is they lease them in their business or their corporation name and they write it off on their taxes. So that is just yet another way of how having a home-based business, even in network marketing, can help you write your lifestyle off on your taxes legally. So as you can see, when people are not educated about money, they don't make the best financial decisions for themselves. And that is actually things that we talk about in the industry of network marketing that some of the anti-MLMers consider brainwashing. So educating people on finances and taxes to an anti-MLMer is considered brainwashing. So let's have a listen to exactly what's going on, what Americans are doing as far as these car loans, and it's not even tax deductible.
Americans are buying more expensive cars. The average transaction price on new cars is now about $38,000. One thing that is driving this trend, so to speak, is that dealers are offering car loans with longer terms. Now, a 7-year car loan might mean lower monthly payments, but it's probably not the best personal finance move, as NPR's Chris Arnold reports.
Okay, so now that we know that there's over 400 monthly tax deductions for home-based business owners, one of those tax deductions are for people who have children. Now, I've repeatedly heard in the anti-MLM community of people stating that anti-MLMers are predatory against single women with children. They're predatory against stay-at-home moms, and they're taking advantage of those women with their predatory practices. Now, one of the things that those anti-MLMers just may not be educated on is that that single mom can actually hire her children if they are under the age of 18 years old. Now, this is all legally done according to the IRS. Now, what you can do is you can hire your children, ladies. You can hire them to do something as simple as put the names of your clients in alphabetical order, something that they would be able to do. You can hire them to advertise or help advertise your business on social media channels like Facebook or YouTube. They're very good at technical things. You can either have them wear a t-shirt with your business name or your business website on it. And if you hire your children to do various things that they can actually do, you've now done 2 things for your household. You can pay your child up to $12,000 a year of tax deductible income. Now that's your child's salary. So that is their salary that you can now put into a savings account for them for when they turn 18 years old. So you can do this with a child from age 6 to up to 18 years old. I think it's actually up to 17 years old. So you can pay them from the profits of your business, and now that is more tax deductible money that is in your household and out of the IRS households. Now, this is why someone who is in network marketing may be targeting or to recruit single women with children or stay-at-home moms, is because we're aware of the $12,000 tax deductible expenses that can help lower that woman's taxable income. And we just helped put her children through college as well by showing you how you can pay your children to help you run your business and put that into a college savings funds for them. So let's consider our targeted single mom named Mary, and at least let's see what else Mary would have the luxury of taking advantage of if she was to be so lucky to be preyed on by someone who is in a multi-level marketing company.
Let's assume that Mary is in the 33% tax bracket, which is the average in the United States. So there's a good chance that this fits you as well. Let's assume that Mary used her cell phone 90% for business purposes, and her total bill is $120 a month. That means she gets a deduction of $108. Now let's assume she has an exclusive office that she uses 20% of the square footage for her home. If her mortgage payment or rent payment is $2,000, that means she gets a monthly deduction of $400, which is 20% of $2,000. We'll assume utilities are $400. Multiplied by 20% means a deduction of $80. If Mary spends $200 a month on eating out, she can successfully turn those into business meetings, which means she gets a 50% deduction of $100 a month. The same would go for fun entertainment. At $200 a month, that would equal a $100 deduction, because in both US and Canada, you can deduct 50% of your meals and entertainment. If Mary drove 200 miles per month, that's 7 miles a day, at a deduction rate of 56.5 cents a mile per deduction, that's a deduction of $113. Now remember, a deduction is not cash. So let's multiply the total deductions by the average of 33% tax brackets, and these 6 deductions, documented properly, create a tax savings, a cash savings on taxes of $297.33 each month. Now, multiply that by 12 months, and she is saving $3,600 per year when it comes to tax time. And I want to point out that these expenses were expenses that she were incurring regardless of her having a business. And there are many more deductions. We just discussed 6 of them. We're just barely scratching the surface of business tax benefits.
Okay, and the last thing that I would like to talk about, just for the sake of keeping this video short, I could talk about it all day long, but I'm not going to do that. But the last thing that I'm going to talk about is another way that you can lower your taxable income by hiring your spouse in your home-based network marketing business. Now, you may be wondering, well, how would I be able to do that? Well, this is just yet another reason why people who are in multi-level marketing or network marketing companies target or prey on stay-at-home moms, because that stay-at-home mom has the ability to start a home-based business while her husband, who's employed and out working, they will be able to write off their health insurance, things like surgeries and other medical expenses that stay-at-home mom would not be able to do if she was just strictly staying at home, or if she went out and got a job as well. But I'm actually going to bring in another YouTuber to help explain that.
So here's some reasons why you may place your spouse on the business as an employee that you may not have thought about. So the first one is health insurance benefits. It may be cheaper to cover your spouse as an employee rather than a dependent on your health plan. You see, many times we'll add the primary business owner as the covered employee, and then we'll put the non-covered employee, as the spouse who doesn't work, as a dependent. But it may be cheaper to add your spouse to the 401k. I keep saying 401k. It may be cheaper to add your spouse to the business because they can get cheaper health insurance. Just a thought. And while we're talking about health insurance, by adding your spouse, you may be able to create an advantage by using a health reimbursement arrangement, or an HRA is what we call those. And now these strategies work really good for a sole proprietorship or a C corporation. They're not really good for an S corporation unless you couple it with a sole prop management company. And that's a whole strategy for another day. But figuring out sole proprietorship or a C corp can use an HRA. A health reimbursement account, or HRA, health reimbursement arrangement, some people call it, or health reimbursement account, is an IRS-approved tax advantage health benefit plan that's basically going to reimburse the employee, in this case, your family, for out-of-pocket medical expenses and your health insurance premiums. So it's a business deduction. It's 100% funded by the business or the employer, and the terms of the arrangement can provide the very first dollars for your medical coverage that are until your health insurance kicked in. So you may go in and put a high deductible health insurance plan in place, and has a very low co-insurance amount. So the maximum out-of-pocket deductible may be $25,000. If you know you're going to have a lot of surgeries or whatever, if you know you're going to be dealing with this, an HRA may come into play. So you can ride the deductible way up, and therefore you're able to now deduct, if it's done right, all the medical expenses and the premiums at the company level, not at the Schedule A level. So it's an excellent little benefit here at HRA.
Okay, guys, so that was really great information, right? So hopefully, if you've had a chance to watch this video with an open mind, hopefully you've been able to see why this business is still legal and why people are still doing it and why it's an excellent business for someone who is a stay-at-home mom or someone who is a single mom with children, is because who does not want to lower their tax bill and simultaneously save money for their child? It could be a college fund, or it could just be cash savings for when they turn 18 years old. I personally believe that is an excellent business strategy. And people who are very well versed in the areas of business, finances, and money, as well as the American tax system, they just so happen to agree with me. And those people are not in multi-level marketing companies. They just know business. So with that being said, I'm going to go ahead and wrap this video up. Hopefully, I really had to just come out and do this video because I got so tired of seeing people in the anti-MLM community just feed their subscribers complete lies. Just the whole predatory, and they paint, it's their job to paint the industry as predatory so that they can get more views on their channel. But as you just seen from this video, it's not so predatory now, is it? If it's going to lower your tax bill by over $20,000, some of you actually need that. Some of you are going to get hit with IRS penalties because you either made too much money. But what if we could shave off $20,000 of your earnings from your job because you have a home-based business in network marketing? How predatory is that? Is that something that you would consider to be predatory, helping somebody save on their taxes? I don't think it is. Now, just to be fair, network marketing is not the only home-based business available. There's plenty of other home-based business options. However, some of those businesses can cost a pretty penny to get started in, whereas if you do a network marketing company, you can get started in a network marketing company with, some of them only charge $25 to get into the network marketing company, which is also tax deductible, which is reason number 1006 of why the whole anti-MLM community is comical to me, because it just shows that they don't understand the American tax system and that they don't understand business, and they're actually keeping their subscribers from taking advantage of these tax loopholes that are available to people in network marketing companies. So with that being said, thank you for watching, and I hope to see you on the next one. Ciao, ciao.
All right.